Welcome to KMET 1490 AM ABC News Radio and the Southern California Business Report with Yvette Walker, a show dedicated to highlighting successful Southern California businesses and the people behind them.
Welcome and thank you for joining the Southern California Business Report on ABC News and Talks KMET 1490 AM, 98.1 FM, and KMET TV. I'm Yvette Walker, live blasting our signal from the center of Southern California, serving a population of over 25 million. Get us crystal clear and on demand by downloading the free KMET live streaming app on Google Play or the Apple App Store. A huge shout out to the team as always, Mitch, Bill, and Sean. I love you. And to our special advisory committee, Bill Morris of UCI School of Business, Jose and Camila Rubio. Thank you so much. Don't forget to check out the Jay Kaplan Show, also on KMET on Fridays at 3. Today, I am so incredibly excited to be introducing Ben Dake, a technology consultant of Blue Ocean Asset Management, for this part one of a 3-part series aimed at understanding the landscape of cryptocurrencies and its impact on the future of global financial systems. Ben Dake, a technology consultant in the Southern California area with 28 years of experience consulting on matters ranging from acquisitions of companies and large property upgrades to the day-to-day management of both small and medium-sized businesses. Ben started to dabble in crypto back in 2013 with the now popular DOGE, but got more heavily involved in 2018. Ben created a proprietary trading algorithm and automated it for use in the crypto space with different exchanges and uses that are used to manage funds of family that he is a part of. On the business side, Ben is part of the technical crypto arm of Blue Ocean Asset Management, also known as BOAM. Ben is leading the blockchain side of the proprietary products that BOAM will be bringing to market, including overseeing smart contract development, security auditing, and infrastructure management. Ben is also the CTO of a bond offering that will be used to tokenize upcoming market for the fourth quarter in 2022. Thank you so much for joining us, Ben.
Well, thank you for having me.
Well, as you know, and I tell all of my guests before we start, I love to share the background story of each of my guests and, share with our audience how it is you basically became what you are right now in the cryptocurrency space and part of BOAM.
Well, it was in my blood. It was a family business from a long, long time ago. I started when I was 10, 11 years old, and my father was a network consultant and a programmer, and so from a very young age, I was out there doing stuff in the technology world. I remember, I'm going to date myself, but working with DOS, before DOS 622 and Windows 3.1 and all these old programs. My first thing on the internet was under Windows 3.1. I had no idea what to do. My dad was telling me go do this, and I had no idea. And so this was a long time ago, and the internet's changed. And we were a consulting firm with my family business, and as it grew, and I kind of took on my own, and I took over the family business, and just working with different clients, different customers, developed some relationships, and those kind of flourished into where we are now. And I met some people, and we kind of teamed up and created this Blue Ocean Asset Management group, and that I'm a part of. And kind of the rest is history. We've just been doing this for years, and developed trading strategies, and developed a family office out of it that uses my trading algorithm. We've pulled our funds, and we trade crypto on a daily basis, and using that proprietary algorithm, and it's working out well. And so that's a little bit of who I am. But what I am not is a financial advisor. And so I need to make sure that everyone's aware I am not a financial advisor, and the information provided does not constitute investment advice, financial advice, trading advice, or any other sort of advice. You should treat this content as such. These are my opinions. Trading cryptocurrencies carries a very high level of risk, and it may not be suitable for all investors. You should conduct your own due diligence and consult your financial advisor before making any investment decisions. So a little bit about me and who I am and what I'm not.
Beautiful. That's perfect. So let's just get into it, because cryptocurrency has been a very, very hot topic lately. So with that said, what exactly is cryptocurrency, and why should we be paying attention to it?
Okay, well, that's a very, very good and very basic question. And so the answer can be extremely long, and I will try and do my best to summarize that. Um, I come from a very technical background, so I will try to not be too technical, but uh, at its core level, it's an open public ledger. So what that means is it's not necessarily private. It is open for the world to see and to create tools on. So if you have a business that runs like Walmart and you want to do a where has your agriculture been? Where'd it come from? And what trucks has it been on? And what states did it pass through? They can just scan that information to this open public ledger, and then you can go scan your QR code on your broccoli and find out where it came from using the public internet. So that's kind of it's just an open ledger at its very simplistic level. Now, why you should pay attention to it, that's a whole different question. Um, it's going to come at you. It's not like for your audience that was a part of the dial-up days. When you had to go, when you wanted to get on the internet, you had to go buy a modem. You had to get a phone line. You had to dial out and connect, and you got mail, and it was you went out and you got it. And now the internet is in your home. You don't go out and get the internet. The internet's in your home 24/7. Cell phones, Alexa, Apple TV, we're there. It's 24/7 around you. And with the internet being let's say a train, cryptocurrency is a runner on that train. It's going faster. Things are speeding up and technology is increasing. We all can kind of see that around us. Things are changing. And so it's going to cryptocurrency is going to come at you. It's not a matter of do I want to pay attention to it. It's going to be in your face. You may not realize it, but it will be in your face and it will be all around you. Kind of like Kodak. Kodak's a great example. Kodak, the film company, a long time ago, they were the name in camera in film development, and now they're nowhere to be found in the camera industry because Apple took them over. No one develops film anymore, and because of that, they didn't stay with the times. They didn't move as they were, as a company should, and they kind of got left behind in that arena. And so it's going to move, and the world changes. If you don't change with it, you get left behind.
Right.
So that's a great way of paying attention to it because it will happen to you. It will come.
So with that said, and the reason why this is a three-part series is because I personally, there's so much to this. There's so much I don't understand, and I have so many questions, and I want to make sure that I try to hit on as many questions that I believe our audience would have in reference to cryptocurrency because it is an emerging technology, or at least relative to some people's mindsets, including my own. So please, let's start off by talking about the external influences that impact the value of cryptocurrency.
So by external, that would be not necessarily the fundamentals of the company behind the crypto, but other external factors, and that really revolves around people and emotions. People get scared. People don't like uncertainty. Markets don't like uncertainty. And so, just like the stock market, that uncertainty plays a big role in the stock market. Uncertainty plays a big role in cryptocurrency, even more so because there's a lot of market manipulation. There's with a very small amount of capital, you can move the market. We saw that happen just recently over this last weekend, where the market got moved because of a small amount of capital. And so there are a lot of influences. Taxes are another one. You see some changes in price before tax season, before fiscal year end, before December 31st. There are some crypto changes because people want to get out of certain positions to lock in some profits or lock in some losses. So there's a lot of external factors that do vary, and because it's a small market cap, um, small changes make a big difference in the overall landscape.
So, with that said, can you talk to the recent sell-off and, the impact that it has made in the landscape of crypto and maybe the psychology behind it as well?
Sure, you're talking about what happened with Luna
Right.
and the UST as their stable coin. So, real quick to talk about the stable coin, what they are is they are coins that are pegged to the dollar. So, we live in a fiat world. We all understand everything costs a dollar. Everything costs $10. It costs some level, some quantity of dollars. In the crypto world, that is not the case. You buy things with Bitcoin. And when you buy things with Bitcoin, or you buy things with Ethereum, or all these other base level currencies that exchanges use, um, it's it's like buying with gas. If your lunch cost a gallon of gas a year ago, it still costs a gallon of gas now, but that gallon of gas costs a lot more. The dollar is fairly stable in the grand scheme of things, where $5 in 6 months is going to be $5 in 6 months. You're going to have that buying power. Whereas Bitcoin and cryptocurrencies are not that way. So when you have a base currency of, like, say, Bitcoin that fluctuates with value so much, that changes the price of all the other coins. So um, with the sell-off that happened in Luna, there was $3 billion, billion with a B, $3 billion worth of Bitcoin sold to try and keep Luna solvent. It was a trading algorithm that they got exploited, and their stablecoin got depegged from $1, and people were incentivized to burn their Luna. They made a spread, they made a little arbitrage, and so everyone did it. And then the company proper tried to stabilize it with selling their resources of Bitcoin, and they just couldn't do it. They got caught in a death spiral, and the coin just tumbled down. And with selling that much Bitcoin on the market, that caused because the majority of crypto trading is all automated, all through technical analysis, all through trading programs. And so when Bitcoin crossed a certain threshold, all these other trading platforms came in and started selling as well, so they could buy it back into the lower price. And then arbitrage happened, which lowered all of the other cryptocurrencies because people were selling, trying to make a little bit of profit on the way down. So that's why the entire market went down, but it was specific to Luna and the UST, and then the Bitcoin sell off to stabilize that. But then through arbitrage and other just natural things that happen in the crypto world, everything went down.
I see. Okay, so with that said, can you please talk about the different forms of cryptocurrency and maybe how they all interrelate?
Okay, so there are for different forms, we can go with maybe a utility token and a security token. So those two would be the very high level differences. A utility token, like the name would suggest, it has a utility, it has a function, whereas the other token would be a security, would be a more of a financial instrument. Bitcoin is a great example of a security. It's a financial instrument. It's basically cash. It could be very similar to gold. There's a lot of similarities to gold in that. Whereas the utility tokens are more a use case. You build on them. Another very common cryptocurrency is Ethereum. And Ethereum is kind of both, in a sense of you can build a coin on top of Ethereum's blockchain, and then you pay for all your transactions in Ethereum. So it's a utility token, but by the same token, no pun intended, it's also kind of a security in the sense of it's a financial instrument because so much used, so well used in the environment. So the two major types are going to be the utility token and the security token. And a long time ago, in the grand scheme of things, a long time is 3 years. A lot of ICOs happen, initial coin offering, just like an STO, secured token offering. The ICO was kind of the wild west of crypto, where people were creating random coins and they were just saying, "Hey, look, come give us your money and we'll do this." And they do, and they lose all their money. Coins coming out of different countries that have no regulations, and they would just take your money and run. Then the SEC kind of cracks down, people go to jail, and they're a little more scared. So now there's STO, secured token offerings. They're a little more structured in that regard, but there's still very much a Wild West component to crypto. So,
So
go ahead.
I was just going to say, you talked about the creation of coins. Can you just go into a little bit about how those coins are created?
Okay, sure. So anybody can basically create a coin. It costs you a little bit of time and $15. So there are thousands and thousands of cryptocurrencies out there. A lot of them are just pointless, useless, nothing. But you just basically can go to a block explorer, like a website, and you do some coding into a smart contract, and you tell it, I want to make 50 billion of these ABC XYZ tokens, and you set what's called tokenomics, which are the economics of your token. You set that, and it then is created. It's out there, and you pay your fees, and the coins go to whatever wallets you want. And if someone will buy them, then you have a value. So if Elon Musk is in the news right now, if he came out and said, "I'm creating a token," there would be a lot of value in that token because of his name. If I went out there and said, hey, I'm creating a token, I don't know what it's going to do yet, but I'm going to create it, there's not going to be any value in that token. So it's all about, supply and demand. What will the economy or what will the market pay for something, and that's what establishes the value. So creating a token is simple code. It's 20, 30 lines of code, and you create a token. It's does the market accept your token? That would be the bigger issue.
Right. And so when you bring up names like Elon Musk, how has, his presence in the cryptocurrency market influenced, the understanding or the profile of cryptocurrency?
Well, I would say it's kind of polarizing in a way. Like back in 2012, I started mining Dogecoin. I started doing that just as a play. A friend of mine got together because I had a technical background and a lot of technology infrastructure. I had computers running that we mined on, and we created a bunch of Dogecoin, about 400,000, and for free. It just took time and no big deal. Was we got 400,000 for free, and no one thought a thing of it. It'll never really amount to anything. It was just play. And I sold when it spiked up to zero point 0.9 cents. And then enter Elon Musk, and he starts talking about Dogecoin, and it goes to 75 cents. So if I had held on to that, there's 375,000 or $300,000 ish of capital that I would have gotten for free if I had held on to those coins. So you can see how quickly a person can influence. Like Elon Musk, a personality like that can influence a coin just by stating something, just by saying the name. And so there's a lot of responsibility there. But he's kind of polarized the market. People like it, they don't like it, and it causes that volatility in price. And it's interesting to watch and see how it all unfolds for sure.
Right. So when you talk about this increase in the value and then, basically cashing it out to dollars, can you just touch on that and, talk about how that digital money that you mine for is basically translated into dollars and how one would gain access to that?
Sure. So a fiat on ramp or off ramp is what they're called. So you've got exchanges like Kraken, Gemini, Coinbase, Binance. These large entities that are there are companies in the traditional sense of the word. They have their infrastructure, their technology infrastructure, and you can send your coins to them. Okay, and there's a myriad of exchanges, but these are the ones that function with the U.S. dollar proper, not the stable coins solely that mimic the dollar, but actual dollars. You can ACH, you can wire to these institutions. They have bank accounts, and you can actually work with fiat. So for your question, I mine those Dogecoin over the course of 3 years, and all of a sudden, let's say I kept them, and Elon Musk does his what he does, and the price goes up to 50 cents, 75 cents, and I want to cash out. Okay, so I would take my Dogecoin and I would send it to the exchange using a block explorer to send my coins around. It goes into the exchange. I go onto their website. I log in. I then sell to whatever currency pair they allow, Bitcoin or dollars or whatever it is. I would sell it and I would get dollars. If they sold it to Bitcoin, then I would sell Bitcoin to dollars, just an extra step. And then you get those dollars, and then you can ACH them to your bank account. But now is when you enter into the IRS's domain, because in order to have accounts that transmit dollars, that type of company, you're going to have to KYC, which is know your customer, and AML, anti-money laundering. So you have to fill out these forms, take pictures of your driver's license, and send it in. They have to know who you are, because if the government comes in and says you are a malicious, nefarious, enter the word here, whatever it is, then they can lock your account down and they can track where you've sent things. And so there's some anonymity, there's some not when it comes to cryptocurrency. But to get dollars out, that would be the path. If you have Bitcoin, you move it to an exchange, and then you would then sell it to whatever currency pair, like a dollars, or you could trade it for another currency. And then once you do that, you can then take that money into your bank account and use it in a traditional sense.
Right. And so, as we know, that is a system that's regulated. And we've been hearing about regulation surrounding cryptocurrency in the news recently. So, can you talk about what impact that would have on the value of cryptocurrency?
Well, regulation is both good and bad. The cryptocurrency is still the Wild West in a sense, and in a lot of ways. So when you have this Wild West component of cryptocurrency, there's some fear. Institutions aren't really going to get in to in a big way when there's no recourse, when there's no way of figuring out if someone stole something or if an employee pushed the wrong button. How do I undo that? There's in cryptocurrency there's a finality that is not in the traditional system. When you swipe your credit card or you don't swipe your credit card and your credit card information is stolen and someone does some charges on your credit card, 3 weeks later you can dispute those charges and have them removed and you're not financially responsible. In cryptocurrency, it's not that way. There's finality. A couple blocks, a Bitcoin in 10, 20 minutes, there's finality. It's done. There's no recovery. And so until there's, regulation and recourse, there might not be a lot of institutional investment financially. So if the regulation comes in and it's not heavy-handed and it's reasonable, then it would probably be good for the price in a sense that institutions will want to come in, and therefore the demand goes up and price goes up. But if the regulations come in and they're extremely heavy-handed, people are going to get scared and want to get out. So it could have both, depending on how it comes in. And if history is any teacher, it'll probably initially be heavy-handed, and then maybe some backing off or something along those lines. But regulation could be good for the market.
Right. So it would tame the wild west of the cryptocurrency landscape, it sounds like, and give people a little bit of stability or a little more confidence in knowing it's a little bit more stable.
Well, yes and no, because Bitcoin can't be tamed. It would be the institutions that work with it. So I like to kind of draw an analogy to the old movies, the post-apocalyptic movies, where there's 4 cities on a continent, and they're surrounded by a dome, and there's vast wasteland in between. Well, the dome offers protection, but it also offers laws, and you have to abide by those laws, or you're kicked out. And if you're going across the vast wilderness, there are no laws and there are no regulations, but you also endanger. And so it's a trade off. And so Bitcoin is the Wild West, whereas the exchanges offer protection, but they also offer regulation. And so it's a balance to be had that could be good or bad for the market.
Right. So with Bitcoin being worldwide and not under the control of a single government, how does this impact the value of Bitcoin and crypto overall?
Bitcoin is very much like gold in a sense that there's a chart. There's a traits of money. It's a great chart that talks about how gold and fiat and crypto and how they relate. And so gold and Bitcoin are very similar. So to your question about how does it change more of a geopolitical stuff in the crypto? Look at Russia, what they just did. They came out and said we will take Bitcoin for our oil. And what would be different than them saying we'll take gold for our oil? It's a worldwide accepted currency that has a value. And so when you have countries just pushing their agenda or whatever they want to do as a country, Bitcoin becomes a tool, just like gold could become a tool where they would push it. We will only accept gold. We will only accept Bitcoin. But from a personal standpoint, whether you agree with Russia or not, or care less, you're going to look at your portfolio and say, well, if Russia's taking Bitcoin for gold, or I'm sorry, if Russia's taking Bitcoin for oil, well, maybe there's some value to Bitcoin, and maybe I should have some because it's going to increase that value, and I will want to partake in that. So, China, Russia, Bitcoin, crypto, it's coming, and there's not a lot of regulation that can stop Bitcoin, but the government can do regulation on the companies that accept cryptocurrency. And that's where the regulations are going to come in. It's going to be coming from the government, whereas they can't necessarily stop it, but they can stop the companies. If you do business in the United States and you accept crypto, we're going to make life hard for you. And if they do that, that can be where the people kind of suffer in a sense where they can't necessarily do what they want with their crypto because the government's regulations are coming in.
Right. And we've seen that, even with the recent announcement by China talking about, the development of their own blockchain system that they're going to be introducing as well, it sounds like.
Yeah, there's every country's pushing their own. China tried to kick out the blockchain miners, the Bitcoin miners that were there. Who knows why? Maybe it was a power demand. There's a lot of speculation, but those miners went elsewhere to other countries and started mining again to generate Bitcoin. And that's mining in Bitcoin is a whole nother section of cryptocurrency. But China does that, and they're going to be every country is going to be pushing their own cryptocurrency at some level, but it's just a digital fiat currency at that point.
Terrific. Thank you so much for sharing that. And so for those listening, I'm Yvette Walker on Southern California Business Report on ABC News and Talks, KMET 1490 AM, 98.1 FM, and KMET TV, talking to Ben Dake, a technology consultant of Blue Ocean Asset Management, for this part one of a three-part series aimed at understanding the landscape of cryptocurrencies and its impact on the future of global financial systems when we return.
Every 2 seconds, someone needs a blood transfusion. Be on the giving side. Livestream Blood Bank supports patients in 80 Southern California hospitals. Call 1-800-TRY-GIVING for more information and to set an appointment.
City of Hope is driven to making a difference in the lives of people with cancer and diabetes. We accomplish this by conducting innovative research and providing outstanding care. If you or a loved one has received a cancer diagnosis, go to cityofhope.org to learn more about how our innovative approach could change your outcome.
Ontario International Airport is onto a better way to fly with over 65 daily non-stop flights to more than 20 major destinations and the easiest airport experience in Southern California. Visit flyonto.com/Ontario to learn more about Ontario International Airport today.
Hi, I'm San Bernardino County Sheriff Shannon Dykes. If you're looking to start an exciting career in law enforcement and make a difference in your community, we are hiring dispatchers, nurses, deputies, laterals, and many more. For a complete list of our jobs and more information, visit sheriffsjobs.com.
The University of La Verne is rated first in California for alumni satisfaction. Learn more about accelerated programs offered online and on campus in La Verne, Irvine, Ontario, Burbank, or College of the Canyons. Visit go.laverne.edu. The University of La Verne. go.laverne.edu.
Cal State San Bernardino is home to the only School of Entrepreneurship in California. With globally ranked degree programs, you can start your journey today to become a successful entrepreneur. Learn more and connect at entre.csusb.edu.
Welcome back. For those listening, I'm Yvette Walker on Southern California Business Report on ABC News and Talks, KMET 1490 AM, 98.1 FM, and KMET TV, talking to Ben Dake, a technology consultant of Blue Ocean Asset Management, for this part one of a three-part series aimed at understanding the landscape of cryptocurrencies and its impact on the future of global financial systems. Thank you again for being with us, Ben.
Pleasure. It's a pleasure.
Wonderful. So before the break, we talked about, just general overview of what is cryptocurrency, what are some of the external factors that impact its value, and how to look at it when we're, considering exchanging it from cryptocurrency to dollars.
Yep, but we basically covered that. It's that's where the regulations come in. That's where we're going to have to deal with, government regulation, fiat currency. The worlds are merging right now to where you can be in crypto and you can't function in the world without the actual dollars and the actual fiat. We've heard stories about, with stuff going on in Ukraine, people are leaving Ukraine with their life savings on a little USB flash drive in Bitcoin. So they can take that out and they don't have to They don't have to carry 10 bars of gold or whatever their life savings is. They can take it on a little flash drive, and no one can get it from them because it's encrypted, it's secured, and based by something they may have in their mind, and a number or whatever. So there are definite benefits in the real world to having cryptocurrency, and we can still move that into fiat to keep our feet in both worlds, because it's going to be that way for a while. Fiat currency is not going away, but cryptocurrency is not going away either.
Okay, so based on that, let's move forward and talk about the base components that establish the value of cryptocurrency, and how do we ensure that it's protected?
Well, security and ensuring that security is hard in any environment, including our fiat currency. I mean, look at inflation. How do we secure inflation? It's backed by the full faith and credit of the United States government, and that's what backs it up. So, how do we keep cryptocurrency secure? That's a very long question, and I don't know if we can. And it's one of those risk reward factors where if there's ultimate security, there's very little risk. And if you have a lot of reward, then you have a lot of risk. And so it's very hard to keep things stable. But we did mention that there were two types of cryptocurrency: the utility token, and then the security side, the more the cash side. And so the base components of that, there's a value in a sense. Think of a utility token as the freeway you're driving on. That's the utility. You pay to use that freeway with taxes or whatever, and they come out. And that's the point of utility tokens. They allow a clean infrastructure for you to drive on, for you to run on, for you to operate your business on, things like that. And then there's cash is what you spend. There's the securities token that you would buy things with. And so the component, like the utility components or the utility tokens, those provide infrastructure. Infrastructure is valuable for businesses that want to run on. If you can't get to a building because there's no roads, then your business in that building is probably not going to do well. So infrastructure is extremely important, and those utility tokens that provide that infrastructure allow businesses to function. So it's an economy. It's the same economy that we have here, where if the roads shut down, if we have lockdowns from COVID like we had, that stops the businesses from working. Whereas if we're open and we're allowed to do things, then those businesses can thrive. And so you got utility tokens, and you that provide that path or utility to do stuff. And then you have the stuff that you trade: the Bitcoin, the Ethereum, all those other coins, Dogecoin, for example. You have those things that are more financial instruments that can be traded on top of the utility. So just ensuring that free market and that the demand is there, will keep the value going.
Okay, so can you talk about any notable investment that you've seen in the cryptocurrency arena that has elevated its appeal to the general public?
Um, I think the biggest thing that's recently happened, I say recently, in the past year and a half, would be the concept of DeFi, decentralized finance. People are very much into getting rid of the banks. They want to be their own bank. They want to not be uh, beholden to a bank that can lock your money. If you have the last name and a birthday of a bad person, then they can lock your accounts until they figure out who you are, and that can take months. And you can't pay your rent, you can't pay your mortgage, and things like that. So people are very keen on leaving that traditional financial structure, and DeFi allows that. There are decentralized finance to where you can take your Bitcoin or your whatever cryptocurrency you have, and you can basically put it up into a smart contract for lending. So a business that wants to borrow some, trade some, make more, they can borrow your cryptocurrency, maybe at a 2-to-1 ratio, to where if I have one Bitcoin that's trading around $30,000 right now, they can get $15,000 worth of some other coin, and it's all locked in a smart contract. We didn't really touch too much on smart contracts, but they're basically code that is escrow, for lack of a better term. So when one condition happens, then the contract is executed, and you don't need a law firm to be that escrow. It happens by code. So you can put your Bitcoin up for lending, and you can then make a percentage, an APR, whatever you want, whatever your contract says. And then if Bitcoin drops and tanks, then the borrower has to either put up more collateral, or you take what they put up initially as collateral, and you're then made whole. So people are doing that, and they're able to make money. They're able to escape the financial system that they don't like. And you've got other things where there are coins, there are companies out there that are going to third world countries and doing like DNA sequencing on third world people to stop sex trafficking. There's some really good things that are coming out of that, scanning ivory from different areas in Africa. And if they're part of the illicit ivory trade, their DNA is sequenced from the fecal material of the elephants, and they're able to find where that ivory came from and say, no, this ivory is not allowed. So, and that's all with cryptocurrencies. And then the third world, the people living in those countries, if they have a cell phone, they can be paid for their DNA. Just they don't need a bank, they don't need an ID. They just need a cell phone with internet access, and Elon Musk again with Starlink and internet everywhere. Or if they have a cell phone, they're now able to conduct financial business without a bank. So there's a huge push to bank the unbanked, a whole market that's there, and it also frees people up. And that's kind of what cryptocurrency is about that freeing aspect. But there's also pain in that, and that's where the regulations and things like that can kind of ease.
Very nice. So has there been like a huge investment by a particular entity that shows and lends credibility and stability to the cryptocurrency market as it stands?
There's an investment would be a hard one to go with. There's been they've put in their dollars, they've bought Bitcoin. BlackRock's a big one. There are institutions. Elon Musk is a big one. He keeps coming up. There are larger names that are putting their money into it because they believe in it. But from a use case standpoint, right now, it's more of an investment. It's more of that. You're looking for price exposure. They're trying to make money and trying to build the market up in a sense. But the users themselves are creating this DeFi platform to where one can lend to the other without needing a bank. And so it's that freedom concept that's really pushing the growth and the investment, realizing that I can do this and I don't need a bank. I can do all these things on my own just with smart contracts and what I have.
So, can you talk about ways cryptocurrency holders can prepare for or bypass potential barriers in relation to its use as it is today?
Well, currently cryptocurrency is very free to a lot of things, and not free in a sense of it does cost, but you can still transact freely on the blockchain. If the regulations are going to come in from a government level, in the sense that I use Kraken and Gemini and these big cryptocurrency exchanges in the U.S. that are regulated by the U.S. government. So if you want to move your cryptocurrency around, just by having an exchange, they make you back to KYC and AML, where you have to sign up, provide all your information. They have to verify you. You submit a utility bill and you prove your address, and all of those things. And so um, when that happens, they have control. And so if they want to lock your money down because the government says so, then they kind of have to do that or they lose their license. So from a user standpoint, how a user protects themselves is not having your currency on the exchange. Those exchanges are those post-apocalyptic cities out there in that wilderness. And if you have that, if you have your cryptocurrency, your Bitcoin, your dollar equivalent, or whatever it is on the exchanges, you are subject to the exchange's rules, and the exchange is subject to the government's rules. And so you have security. There's insurance things that back up from hacking and all of those things, but you also are subject to the rules. And if you don't like that, you have to leave that dome of security and wander the wilderness of crypto. But you have no rules and regulations. So getting your cryptocurrency off of the exchange and moving it to your own wallets, protected by your own keys. Well, now you can then you can keep that secure and not tied to any exchange for regulation purposes. Not that we would want to skirt regulations in any way, but to have the freedom to move things around where you want.
Right, got it. So, please talk about the role that keys have in the landscape of cryptocurrency.
So keys, we just mentioned that. There's a phrase out there: "Not your keys, not your crypto." And what that means is, if you don't control your crypto, then it's not yours. So I love doing analogies to help people understand. You have money in the bank. You have $100,000 in the bank. That $100,000 is yours until it's not. Until the bank says we're locking this money down and it's not yours because the government said so, or because there's fraud or whatever purpose. So when the government locks that down, when the bank locks that down, you don't have access. So it's really not yours. It's the government or it's the banks until they deem you worthy to have it again. So if you hold the keys to your own wallets, then you have control of your accounts, you have control of your crypto. You're not beholden to anyone. You do what you want, but you are also your own worst enemy. And if you lose your keys, it's gone. There's no getting back. There's no governing body that you can say, "Hey, I lost my keys. Can you help?" They'll say, "No, I'm sorry." You might as well, take a box and put your money in it and throw it in the middle of the ocean, and you'll never see it again. So you can be your own worst enemy in that regard. So it's a balance. It's a delicate balance of how much security do I want to how much freedom do I want, and you can be your own worst enemy.
Right. So, how anonymous or private is the ownership of cryptocurrency? And is there an appeal to privacy on this platform?
So back to the very beginning, it's an open ledger, and so in open, it's not necessarily private, but the ledger is just alphanumeric accounts that are not, it's not Ben, it's not a vet, it's just alphanumeric things that if you don't know what they mean or who they are, then it's anonymous. But when you move your Bitcoin from that anonymous wallet to an exchange, to get fiat out, now you become known. The exchange knows who you are because in order to transmit dollars, they have to KYC and AML, and they'll know who you are. So going to those domes of safety and security in the post-apocalyptic world causes you to show ID at the gate, and then they know who you are. Now there are cities in that post-apocalyptic analogy. There are little communes out there in the wilderness where you can trade your Bitcoin, you can trade your cryptocurrency for other things. There are swap protocols that things you can't get, they will get for you. And you give them a little bit of Bitcoin, and they'll give you the tokens that the government says you can't have because they won't let you buy them, but they'll buy them for you and they'll give them to you. So there are still ways of anonymity, and it's a big cat and mouse game to where the government comes out with regulations, and then another government comes in and says, or another company in a different governing agency comes in and says, "Oh, we found a way. We'll take 1% of the transaction and we'll give it to you." So it's cat and mouse on the regulation side.
So, talking about the regulation sign, I recently noticed that tax forms request information about cryptocurrency holdings and investments. Can you please talk a little bit about that as well?
Oh yes, this would be part of the heavy-handed government that would come in and say, "We don't really know what we want, but we want everything." And so, I had a problem back in 2018 filing my taxes because I, had to put every transaction of every cryptocurrency that I traded in its dollar equivalent. And people think that, oh, I bought Bitcoin for 30,000, I sold it for 40,000, I made $10,000 in capital gains and all of those things. But with the trading algorithm, I had 487 pages of transactions in my tax form, and so it caused a lot of problems because they didn't understand what they were getting. They just saw it. They cashed my check, that's for sure, but they left my tax form unfiled, and it caused issues for me. So they don't know what they don't know, and they don't know what they want, so they say, "Give me everything," and then it causes problems. But you don't want to be the person that doesn't give them anything, because if you are trading cryptocurrency, you have a Kraken account, a Gemini account, a Binance account, some institution that reports to the government. They're going to know you have crypto, and if you don't check that box on your form, you are low hanging fruit that says, "We know you did something and you said no, so we're going to come after you." So do something even if it's wrong. Just try. There are programs out there that will look at your account, that will give you all the forms, put something down, as accurate as possible, but put something down so that you're not that low hanging fruit that will get a severe audit because you didn't put something.
Yeah, that makes sense. So, can you please talk about the risks in relation to hacking? Hacking is a big buzzword of cryptocurrency accounts.
So hacking is the blockchain hasn't been hacked. I say that with Bitcoin. Bitcoin has not been hacked. In Bitcoin proper, I should say. people are hacked. Companies are hacked. Certain codes, some smart contracts, they can be hacked. So when you see hacking in the news, Binance every so often, because they're a very large player in the industry, they get targeted. And so when they're targeted, and they have great technology that shuts things down really fast, but then they try and stop it. But normally, it's people are subject to phishing scams with their emails that say, "Oh, reset your password. Click on this link," and they do it. People put their password in, and then someone else can come in and trade a bunch of accounts at one time. So hacking in the traditional sense of some foreign body, some state, some state actor, or some bad person in some other country came into my computer and stole my stuff. That's not the hacking that happens on the blockchain. The hacking that happens on the blockchain is a disgruntled employee at some company, Binance, Kraken, whatever, does something nefarious. And there are insurance packages that those companies have that will take care of the users. And they have what's called hot wallets and cold wallets. So they take 95% of their funds and they store them in cold wallets that don't have easy access. And they have 5% of their funds stored in hot wallets that are in and out all the time. Because as an exchange, the concept of an exchange is people send their tokens and then they trade them on a daily basis, hourly basis, minutely basis at some point. And they all stay within their own ledger inside. So the Bitcoin, the Ethereum, the whatever don't actually move anywhere. And so they just keep a ledger internally of who bought, who sold, and then when it leaves their post-apocalyptic dome out into the real world, well, that's where they have that 5% that's exposed if there is a hack or if there is something along those lines. So the to sum it up, people are hacked. Blockchain, the technology that secures the blockchain, that is very, very stable and strong, but people are the weak link. Code that people write is the weak link where people come in and exploit things. And sometimes it's not exploit, it's just simply we found a way to make money on your code, and we're going to use it. Survival of the fittest.
Right. So please talk about available safety measures for those looking to invest in cryptocurrency if they exist.
So safety measures. Nothing is safe 100%. You can definitely do things that improve your chances. Um, so we talked about keys a little bit. Holding your own keys, holding your own crypto, that's kind of first and foremost for security, but you also have to secure from yourself. If you lose those keys, you've lost everything. If God forbid you were to die in a plane crash or whatever, does your family can't produce a death certificate and get that crypto? There's no governing body, so you have to put in safety measures. You talk to your financial advisor if they support crypto, if they can do things like that, and you work with someone. But there are certain things that you don't trust anyone with. Keys are one of those things. You can write them down, put them in your safe. Maybe you mix up some words and tell your significant other, your spouse, your whoever, how to find them, how to do that. But it's still in its infancy in that regard. And there will be something that comes out, I'm sure, because there's a need. And whenever there's a need in a capitalist society, there will be someone to fill that need. And so, but right now, protecting yourself is great. Take it off the exchange, but at the same time, protect yourself from yourself by securing it in some way to make sure that your family can get it, you can get it if you have a problem. There's always ways of getting back to it if you have your private keys. Having a hardware wallet is another great example. You can have it makes it a hardware wallet, makes it easy to access those long strings of keys by protecting it with a simple pin. And so it stores all your keys, and all you need is your pin and your phone, and now you can get access and you can move crypto around. So that's a whole nother securing crypto is a whole nother series that we can definitely get into. But biggest thing is secure it from yourself as well as from the exchanges.
Right. And you just hit on a key point, which was survival of the fittest, right? And so if we
Mhm.
look at cryptocurrency, the landscape as financial Darwinism, what would you say that looks like?
Oh, survival of the fittest. Yes. So that kind of comes into the concept of code is law in a sense that if I can do it, I will do it. And if I can steal your funds, I will do it. And it kind of takes out the moral issue. There's no morality in that sense. If I can, I will. And there's an ethical debate there. that you would want to look into. But from just a strict Darwin standpoint, survival of the fittest, if I can, I will, and the code wins. And if I can do it, I will do it. That is the Wild West. And that's where the institutions won't necessarily get involved. There are chains out there now, third, fourth, fifth generation chains that have more of a democratic standpoint, where you have the governing bodies of the chain, where they can be voted in by the token holders, and if they don't like what someone is doing, they can vote them out. There's control there. And then there also, if I lose my keys, there's a governing body that comes in and says, okay, well, we can potentially solve that. And that's how you get licensing, and that's how you get things in other countries, is by being able to provide those services, because people lose things. And so it's a very delicate balance of, do I want the Wild West, or do I want the stability? And these chains are merging those two with a wrapped, what's called a wrapped Bitcoin. And the concept is, you can take Bitcoin from the native network, the Wild West, and you can bring it over, you can send it to a wallet that's controlled by that democratic governance chain, to where they hold that Bitcoin on the native network, and they wrap it, maybe WBTC as the token, so that you can move it around freely in a governed, regulated exchange, or not exchange, but a blockchain. And then you've got protections. You've got things that you've got recourse, because you're in that dome, in that post-apocalyptic concept. You're under regulation, and so when you have that, you have the ability to have institutions come in and have protections, and that's really important for the environment, the cryptosphere as a whole.
Wow, that's wonderful. And we're going to cover so much more ground. This is part one of a 3-part series of so much information in relation to cryptocurrency. Thank you so much, Ben.
Well, thank you very much for having me. I look forward to coming back.
Wonderful. So for everyone listening, don't forget to look for us on Facebook, YouTube, LinkedIn, and Instagram. Check us out on scbrtalk.com, and don't forget to download the free live streaming app on Google Play or the Apple App Store. Don't miss my interview with San Bernardino County District Attorney Jason Anderson. Mr. Anderson has been a member of the California State Bar since 1997. He graduated from Regent University School of Law in Virginia in 1996. Mr. Anderson served as a Deputy District Attorney for the County of San Bernardino from 1998 until 2014. In this capacity, he worked as a prosecutor handling a variety of serious cases, particularly in the Crimes Against Children Unit, for 13 years. Mr. Anderson has been married for 26 years and has 2 children. District Attorney Anderson's mission includes respecting and inspiring confidence in the rule of law, both inside and outside the office, collaboratively ensuring justice with excellence, integrity, and compassion, stewarding public resources to hold the guilty accountable, support victims of crime, and honoring the humanity of all involved in the criminal justice system, and restoring the culture of service and accountability to the San Bernardino County District Attorney's Office. Next week, we will have Nicholas Guillen Perez, the managing partner and founder of Blue Division Ventures LP. Nicholas is the quintessential entrepreneur with a major focus in the sectors of financial planning, fundraising, real estate development, and specializing in veterans, job, and housing opportunities. Under the Blue Division Ventures umbrella, he has launched the HEMP initiative, which stands for Help Employ Military Personnel. This foundation acts as a resource prism for veterans to be able to acquire certifications to gain increased income opportunities, job opportunities, housing, health, and their complete military benefit resources. Nicholas has an extensive background in commodities, real estate, fundraising, and financial services, and family planning. With business, family, and personal planning, which includes full business benefits planning for 401k maximization, tax-free income strategies, group benefits, Native American benefits, and investment senior benefits, he believes that securing your full financial future and planning your legacy should be priority number 1 for everyone. Nicholas has been in the finance sector since 2003. Nicholas is a true native son of California whose roots go back to the early 1700s. Nicholas has a genuine desire to help others reach their goals, with his motto being, "I would rather create a tide which rises all ships." Outside of just business, Nicholas has a deep dedication for elevating nonprofits and for community development, and currently sits on the organizations including the UCLA Scholarship Foundation, Cal State San Bernardino Grad and Business Schools Dean and Advisory Board, Black Chamber of Commerce, the Unforgettables Foundation, Miracle and Dreams Foundation, National Association of Insurance and Financial Advisors, as well as Caramel Connections Foundations. Everyone, we will see you next week. Don't miss it.
This has been the Southern California Business Report with Yvette Walker on KMET 1490 AM, FM 98.1, and ABC News Radio affiliate, a show dedicated to highlighting successful